Yo, I hope everyone is having a good day, having a good week, and trading safe. It is NFP this week, so definitely I would look to stop trading by Wednesday AM session. Hoping that I've got some trades for Monday, Tuesday, or Wednesday. Um, so this is a Euro trade, Euro short. I got my entry in the Fair Value Gap and then a bearish order block. It runs buy side. It also had news at 10 a.m., which I thought was manipulation. It was running higher. I thought because there was sell side lower as well, and that price wanted to run back into a daily inefficiency, that it was gonna run lower. So manipulate everyone's thinking it's gonna go higher and then run lower. So I was short. My stop was the mean threshold of the bearish order block, just above that. So a really tight stop. Usually you should actually put your stop above the order block because you have to allow like mohawks, like wicks and stuff. But I did put it a few pips above. So yeah, once price does tap into the bearish order block, it immediately rejects it, which is a sign or like a signature that you're on the right side of the market, which is good. So that means I'm more confident in holding the trade. Starts immediately running lower, taps into another bearish order block. I didn't mark it on there, I don't think anyway. Because I'm looking at a small screen, so I can't exactly see what I'm like drawing on the charts. But yeah, price rejects even lower. There is a BISI on the left hand side. I'll draw it across here. I want that to become an inversion fair value gap. I don't want it to for price to trade straight above that. If it starts trading above it and showing support, then I probably would have closed the trade because it would have probably just wanted to run buy side. But it does act really nicely as what's it called, an inversion fair value gap, so as resistance. Here, where I drew the order block, that actually isn't an order block. I just got it wrong because it was in that range. So the order block was still on the left hand. Like, it's hard to explain when I can't put it, but the order block wasn't that. So I shouldn't have actually closed the trade. I closed it because I thought it closed above the mean threshold, and it was a propulsion block. But I should have still had the whole position going. Here it taps into the fair value gap, so institutional order flow entry drill that is, and it runs that sell side. So that's where I should have took a bit of partials there. Hence why it does pull back up a little bit, back into the inversion fair value gap. Here I thought it was a balanced price range. I have to get better at that. ICT does explain where price runs lower immediately and then runs back up higher, so it has two efficiencies. That means it's a balanced price range, and once it leaves that, it shouldn't really return back into it, and if it does, then it's not, then it will run higher. That's why I put my stops there. But if I didn't put my stops there, and I usually wouldn't put my stops there anyway, but as you can see, it does run lower in the end, and it was a nice trade. But yeah, shout out to ICT, thanks for watching, be safe, and hopefully NFP is some fireworks. So yeah, thanks.